I mean, the U.S. has increased its debt by several times since 2009. Japan, oh my God, they can't even count the debt in Japan. Many countries in the world, the debt just goes higher and higher and higher.
Amidst the current state of the markets, there are fears of a very ferocious market correction that could lead to the worst bear market the economy has ever seen. Author and investor Jim Rogers explained in a recent interview why he believes the upcoming bear market could be the worst in history. Stick around to the end of the video to gain much needed knowledge of the economy's status quo. As a result of the unexpected economic rebound that followed the pandemic, which has since produced considerable inflation, Jim Rogers, chairman of Rogers Holding and co-founder of Quantum Fund, has joined the list of analysts warning of a bear market. Kitco News recently spoke with Jim Rogers about the current state of the economy as a whole and the stock market. As a direct result of the speculative economic bubble that exists in each nation around the world, Rogers stated that he anticipates the upcoming bear market to be the worst in his career, and he bases his expectations on the astronomical quantities of debt that exist in the United States. Rogers made reference to his beliefs as being compatible with the Austrian School of Economics, which bases its theory of the business cycle on the concept that debt plays a central role. According to this hypothesis, when there is a surge in the value of the economy, debt levels rise. Investors behave irresponsibly, and the market price of enterprises is far higher than their true value. Once investors discover that they have taken on too much debt and that businesses are being overvalued, a sell-off will commence, which will ultimately lead to a collapse in the market. Rogers stated that it had been 13 years since we had a major debt crisis, and also that the markets had not reacted in the way he had expected. With the highest debt in US history, the economy is long overdue for a correction, and it is apparent from past experience that anytime such an occasion arises, the economy declines significantly. At the moment, the national debt of the United States is over $30 trillion, and the debt to GDP ratio is 125%. Several economists argue that a debt level that is greater than 90% of GDP is detrimental to the expansion of the economy. Despite predicting the very worst bear market, Jim Rogers stated that a favorable change in Russia-Ukraine relations and a move to settle the Ukraine war might produce a large stock surge. Nevertheless, he cautioned that even if a rebound were to materialize, it would be succeeded by a severe market meltdown.
It's good to see you, but you are the bearer of bad news, saying that the situation for US equities is about to get a lot worse. How much worse?
Well, what I have said is we're going to have more bear markets. We've always had bear markets. Now, in Washington, they say, no, we're not. Everything is okay now. No more bear market. If you believe them, don't listen to me. But I know more bear markets are coming. And what I have said is the next one is going to be the worst in my lifetime. Maybe we're in the minute now. I don't know. You should watch Kitco News to find out. 2008, we had a problem of too much debt. Michelle, since 2008, the debt, oh my God, look out the window. The debt is skyrocketing everywhere. So the next bear market has to be horrible.
Well, assuming we're in one right now, and we know that the S&P 500 is already down 20%, so sure looks like we are. The ones that you have referred to as being the worst in your lifetime, the S&P fell by at least 50%. So by that calculation, we still have at least another 30% to go down here.
But before this bear market is over, of course, many stocks are going to go down 70, 80, 90%. That's the way bear markets work. No, of course that's going to happen. I just don't know when it is. Watch Kitco News. They will tell you.
Well, that's why we have you on Kitco News. So it's going to be worse because we have even more debt in the system.
First of all, it's been 13 years since we've had big problems. And that's the longest in American history. Could go for 30 years. Who knows? Who knows? But it's already overdue on a historic basis. And it's very, very expensive. And it always goes down a lot when it goes down. We have very high valuations. We have staggering debt. We have a lot of new investors coming in. Michelle, it's not my first rodeo. I've seen this movie. I know how it works. They're all going to lose a lot of money. I hope I'm not one of them.
Well, Jim, I'm not sure Washington disputes that we're in a bear market. Hard to dispute that when the S&P 500 is down 20%. So by technical definition, we're in a bear market. But I do get your point that many in Washington aren't acknowledging that we're in a recession, although we may very well already be in one. Second quarter GDP estimates expected to be negative. So then again, by the technical definition, 2 quarters of negative growth, we are in a recession. But to your point, many in Washington haven't quite come to terms with that or admitted that. But what is your outlook at large, especially as the Fed tightens more aggressively?
I wish I could quote you all of the time. Washington has said we're not in a recession when we were. They didn't even know it, that the recession had started. And likewise, central bank people. My outlook is that if we have peace, there's a lot of pessimism around right now, huge amounts of pessimism. Whenever there's a lot of pessimism, it often leads to a rally. If something happens in Ukraine, there'll be a big rally. Oil will go down, grains will go down, stocks and everything will go up for a while. I don't know what will cause the rally, but we're probably going to have a big rally. That rally is, I hope I'm smart enough to sell that rally, because that's probably the last big rally. It could be a very big rally, but that's probably the last time.
And that would or could be triggered by a resolution to the conflict in the war in Ukraine, is what you could see as the possible trigger for a rally.
The obvious for me would be if something happens in Ukraine. I have no idea. I don't have any inside information, but if something happens, that would cause a big rally.
But you're saying we're currently in a bear market, but not necessarily the one that you anticipate will be the worst in your lifetime.
When it's the worst in my lifetime, you'll know it.
It's not now? We're not in the middle of it now?
No, this is not the worst bear market in my life. This is nothing. This is nothing. Oh my gosh. I have seen some astonishing bear markets, not just in the US, all over the world.
But you don't think that we're in the beginning of the worst bear market of your lifetime?
If you want to define it that way, yes. But if there were peace, we might make new highs. But still, that would not negate the bear market.
All right, so we're in a bear market. We could still see a rally on positive diplomatic developments out of Russia, Ukraine. But ultimately, we're still owed another huge bear market, worse than anything we've seen before, even if it's not this one, if I may recap.
How can it not be a horrible bear market? You know what the debt has happened? I mean, the U.S. has increased its debt by several times since 2009. Japan, oh my God, they can't even count the debt in Japan. Many countries in the world. The debt just goes higher and higher and higher. 2008 was because of too much debt. It's much worse now.
Well, it's apologies for the wobbly table here, Jim. It's much like the economy. It's wobbly like the economy. So you were correct that you said that this unprecedented fiscal and monetary stimulus was going to cause inflation. You said that in March of 2021 when you were on the show. Now we've hit 9.1%, a new high over the last 40 years. What is it going to take to tame this inflation?
To fix it? Well, no, they don't know how to fix it. The only thing, Michelle, in 1980, interest rates on Treasury bills, U.S. Treasury bills, were over 20%. That's not a typo. 20%. It cured inflation. It solved the problem finally. No, because we've made so many mistakes this time around. Interest rates will have to go very, very high. We will have a serious recession. Many people will go bankrupt. We're going to have a lot of problems. There's no other way to solve the problem.
Other than to have double-digit Volcker-esque type of interest rate hikes.
We have a choice. We either raise interest rates a lot and have a lot of pain, or we let people continue to print money and have horrible, horrible inflation and cause even more pain. There's not many choices.
Well, we've had the likes of Art Laffer and Stephen Moore on the show, and they're saying that if you take a supply-side economic approach and you cut taxes, for example, that we could get out of the situation without a recession, or certainly not one as ugly as would need to be to tame interest rates by just increasing, to tame inflation by just increasing interest rates?
I am all for cutting taxes. It's always better for any country, any economy. The fewer taxes, the better. Fine, if Steve thinks they can pull that off, by all means. But if we cut taxes, we're going to have big push into the economy. But while these guys are printing money, it's just going to make inflation worse. I don't know how we solve the problem of too much inflation without pain.
Right. Well, and there is a call for even more stimulus by the Biden administration. Democrats wanting to get through a watered-down version of the Build Back Better plan. So that certainly is going to perhaps, or definitely pour more gasoline onto the fire there. So, Jim, what can an investor do in this environment?
Well, first of all, investors should only invest in what they themselves know a lot about. They shouldn't listen to hot tips on TV, even on Kitco News. That's a terrible way to invest. Stay with what you know. I can tell you some of the things I'm doing. When you have inflation, if you own the things that go up in price, you make money. I mean, agricultural goods are going to go higher before this is over. Energy will go higher before it's over. Everything will go higher before it's over. Real goods. If you own those kind of things, you will do well. If you know how to sell short, then you can sell short many things, many stocks, not just in America, all over the world, and make a lot of money. If you don't know how to do either of those, put your money in the bank and wait. It's better to earn 1% per year than to lose 20% per year. And bear markets lead to big losses.
Can you stay in cash in such an inflationary environment?
Sure, the interest rates will go high enough. One thing about interest rates, in inflation, they will eventually go high enough to offset the effects of inflation.
Well, in terms of the outlook of the IMF, the International Monetary Fund, they think that inflation globally will likely be tamed by next year when rate hikes start to work. The IMF saying that global interest rates will keep rising until 2023, and then heated prices will begin to cool in response to actions from central banks. Do you agree?
I've been investing a long time. I have never known the IMF to be right about anything. I don't even bother. I mean, the best thing we could all do is abolish the IMF. We're not, because there are too many people who make money off the IMF. They've never been right about anything. That would be a way towards solving some of our problems. We abolish the IMF, the World Bank. Well, we'd be on the way. We spend on the World Bank and the IMF every year huge amounts of money. All those guys that are bureaucrats who work, they love working for the IMF. They get tax-free pensions. They get high salaries. They get all sorts of perks. They think it is heaven. Well, you know who's paying for it?
Yeah.
Us.
Well, taxpayers in the US, global taxpayers. Just to play devil's advocate here, don't we need global bodies to coordinate things on the world stage?
It would be wonderful. If you can get a good one, do it. The IMF ain't it. You should go back and read some of the IMF's annual reports, some of the things they have said, and you would be stunned at how many times they said, Southeast Asia is great. And then the next year, there's a gigantic crisis in Southeast Asia. I could go on and on.
Well, I know the IMF has taken a very aggressive position against Bitcoin. Certainly no fan of Bitcoin. And you have in the past said that you would have bought Bitcoin at $1 or $5. That's a quote from an interview you had with the Economic Times of India. Bitcoin, not quite that low, but is on sale, 70% down from its all-time high. Would you buy Bitcoin now?
No. What I said was, I wish I had bought Bitcoin at $1 or $5. Michelle, I wish I'd bought IBM in 1914. I wish I'd done a lot of things. I wish I'd bought Amazon at $1. No, all I said was, I wish.
Okay. Well, you can't have it at $1 or $5 now. Well, hopefully not. Hopefully it doesn't drop to that level. But is there a level that you would buy Bitcoin at?
There's no level at which I would buy those cryptocurrencies unless something dramatic changes. No, the answer is no.
What would be something dramatic?
Well, I guess if suddenly the EU used Bitcoin as its national global currency, then you would have to. Then it's no longer cryptocurrency. It's a computer currency backed by governments. Bitcoin is wonderful for people who buy it and sell it and trade it. I know people who are having fun trading it. Nothing wrong with that. But if it ever becomes successful as currency, which they say it will, no government's going to allow that. No government wants to lose its control. They all love their monopoly. They're not going to give up their monopoly. I wish they would, but they aren't.
All right, not a fan of Bitcoin, but you've always been a fan of agriculture. And last time you were on the show, you said that a good inflation hedge was the Rogers Agricultural Index. It did perform well. It did drop over the last month or so, still up about 2% year to date. Why are we seeing a sell-off in agriculture now?
Sure, nothing goes straight up or straight down. Things go up like this. There are always corrections along the way. And maybe there's something else going on, but in my experience, corrections are normal and common. They happen all the time.
So is investing in agriculture still a wise move if you're trying to hedge it against this current inflation?
My answer is yes, but my plan is if there's peace in Ukraine, agriculture is going to go down. All grain prices are going to go down for a while, and that's the time to buy.
What is the likelihood of peace in Ukraine over the next year or so, if you were to prognosticate how this plays out?
Well, I would say the chances are very good. It's a foolish war. All wars are foolish, but I mean, Mr. Putin's not getting anything out of it. The Ukrainians aren't getting anything out of it. I don't see that it's doing anybody any good. And Mr. Putin may get what he wants, or at least part of what he wants, and then things would calm down. But listen, I don't have any inside information
on. You're a man, a seasoned man of the world with insights across the globe, so always like to get your thoughts on things.
I would suspect that there will be some positive development in Ukraine in the next few weeks, yes, if not before.
Wow, in the next few weeks, and that would trigger a relief rally.
That would trigger a big drop in grains, a big drop in oil, which would cause a big relief rally in stocks, because everybody would say inflation's okay now, no more problems, hooray, buy stocks, buy bonds.
What did you think of Jim Rogers' point of view? What do you expect from this upcoming bear market that the economy is about to go through? Give us your thoughts in the comment section down below. If you enjoyed this video, kindly like and subscribe, and we'll catch you on the next one.